Hello traders, my name is Tomasz Wiśniewski, I'm a chief analyst in Alpara Research and Analysis, and this is daily analytical report. Let's start because we have a lot to talk about. We had global correction of global stocks, and it's getting very interesting because in one day we removed many weeks of rises in US. Today European indexes are following this, so it's getting super interesting. From the fundamental point of view, you know that we do not focus much on fundamentals, but we don't focus on fundamentals, but mainly because it's very easy to explain things from the fundamental point of view, right? And this explanation is good as any. Then you have another expert with his explanation, and it's same but different. So it's like this. And technical analysis, you cannot mess with that. You cannot make that up, dots and lines. I will tell you the truth. Talking heads in the news, not necessarily. So what they are saying is that rising interest rates are hurting the borrowing costs. We have rising interest rates, we have higher yields, and this is hurting borrowing costs, and mostly technical. Shares of the technical companies from IT sector are suffering, and for me, this is just the last man in the room switch of the light. You don't want to be the last man in the room. End of the party, and time for a correction. Not recession, obviously, but time for a correction. And when everybody's trying to leave the room, it's crowded, so the drop is significant. The drop is huge. The movements are volatile. The panic is here. That's very common. That's what was happening at the very beginning of the year. So we had this scenario over and over again. Anyway, in 3.5 hours we'll have data from US inflation, very important data, which may help buyers or may bury them, maybe may kill any demand or any willing for catching the falling knives, which is action taken by traders when the indexes are going down like crazy, and when it's happening like that, you have this urge to buy with very attractive low prices. So some traders are trying to catch the falling knife, and we'll see if that will be the case. But when you try to do this, you usually get hurt, obviously, so don't forget about that. As for the calendar, I think that's it. Let's move to the charts. Whoa, you can see this here. That's a nice drop. Let me move this here. That is a nice drop. We removed rises from 12th of July, which lasted till 10th of October. Why, in my opinion, this drop is so significant is because apart from this fundamental explanation, we also have a technical factor. So here we had a lot of stop loss orders, Why? Because we were below the horizontal support and below the long-term uptrend line. So that was natural that many traders who were buying here, buying here, buying here, buying here, had stop losses here. Because you should have a stop loss under the important, significant support. That's how you should trade. And so for me, price breaking the support is not such a big deal. Because from the technical point of view, this movement was maybe not expected, but the scale of this movement, the size of this movement is nothing surprising. There we had another support here, which was crushed relatively easy, and now the price is in a free fall. Let's check this as a comparison. How does it look like here? How deep we can go? Because maybe history will repeat, and we will be able to test this support. As for the further target on a weekly chart, we are approaching also interesting place for a bounce. Maybe we'll see a reversal here. Definitely, that is not good. This candle is not good. And obviously we can bounce from this uptrend line, etc. But chances for this are quite low with the scale of this drop. If we started with index, let's move with the indexes. Maybe DAX. Let's see how the DAX is behaving, because DAX broke super important support, and actually even the trading signal on DAX is even stronger than on S&P 500, because look at this. That is the long-term neckline of this head and shoulder formation. So we do have an activation of the sell signal. We broke the lower line of this channel down formation, or a wedge. That is really a proper legitimate signal to go short. We have a potential target here on those lows from October 2016. So it's really hard to imagine better sell signal than this major head and shoulder formation on the daily and weekly chart. That really changes the sentiment, changes the rules of the game. After this, maybe a small reversal test of the recent support as a resistance. That wouldn't be surprising. Drop here and a downswing. Let's check British FTSE. Let me just remove those lines. FTSE also in a free fall, but the sell signal is not so strong here because of those drops, so we don't have any breakout of a major support. Actually, I don't like the situation here. Let's check the Nikkei. Nikkei is approaching important support, dynamic. Nikkei broke important horizontal support. It does not look good. Maybe we'll have a bounce from this line, test of the yellow line, and then a further drop. But this one can be really dangerous, especially with this false breakout above this resistance. No, I didn't want to do this. I just wanted to change the color here. Okay, and I want to mark this false breakout. So definitely long-term sell signal on Nikkei. We had this. So maybe let's check Nasdaq, because it is said that this drop is led by the companies from the technological sector, from IT sector. Nasdaq is mostly an index where we have major tech companies. So it should suffer the most. On a daily chart, we can see a pretty significant decline. Uptrend line was very steep. Many of those companies were overvalued, definitely. So if the uptrend was so steep, the drop will be even stronger. The thing is that most probably the aim is on those lows here, so on $6,300, $200. That seems like a good place for a bounce. So yes, it may be the start. Obviously, we had a rise like that. Most probably, we won't get a straight decline like that. We need to have some sort of a correction here. Let's check how deep the decline was here. So that's a daily chart. Daily chart removed the rises from July. Yes, from July. So 1, 2, 3. 3 months. Now we're on the lowest levels. We beat those lows from June. We're on the lowest levels since March. We are since May. I'm sorry. So 5 months in 2 days. That's nice. So October is pretty bad. As they say, sell in May, then go away. What do they say about October? So yes, we're gonna leave indexes as the hottest topic here, and we will monitor what is going to happen here. Let's check the euro dollar, because euro dollar has a very interesting setup. There is an inverse head and shoulder formation. Descending triangle, breakout of the horizontal support. We have inverse head and shoulder formation, left shoulder, head and right shoulder. Breakout here of the horizontal support, inverse head and shoulder formation, and that breakout is a head, but also is a false breakout. And another example of the power of the false breakouts. There is an upswing. We stopped yesterday here, but I said that the inverse head and shoulder formation is very likely to happen, and it happened. So yay! And we bounced from this midterm downtrend line. We broke long-term horizontal resistance. We broke the neckline. Then we tested those two as closest support, and now the price is going higher. So we're back on the positive mood for euro dollar. If you want to be precise, you can label this horizontal support as well. It's all good for euro dollar as long as we stay above the, even not the neckline, but the orange area. As long as we stay above the orange area, the sentiment is positive. Here we had S&P 500, you already know, but indexes are not the only instruments that are going down right now. We do have Bitcoin, and Bitcoin is also going south, and also we expected that. I'm sorry. And also we were expecting that. I told you about this flag, and I told you that this flag will reach this long-term upper line of the descending triangle pattern, and that most probably will bounce from this line, and we did. and that most probably will break this lower line of the flag, and we did. That checkpoint I placed here yesterday. And boom, look at this. Why this decline is so strong? It's because, again, the power of stop loss orders, the power of the technical analysis. So many traders knew about this lower line of the flag and they had their stop loss orders here. And look what happened when we triggered that. Now as for the target, the yellow area is the target. Obviously, that is a long-term horizontal support, $5,800, $5,900. Depending from the exchange, depending on how you will move this line. That is a wide area, and according to the technical analysis, we don't necessarily need to see a bounce here or a breakout. Now what can happen is breakout now, or we can bounce from this line, bounce from the blue line again, and actually I'm gonna make it like that. Bounce from this line, bounce from the blue line, and then a breakout. There is no rule when the descending triangle has to be finished. Actually, it can go both ways. It can result with a breakout of the upper line as well. But the thing is that the more trading is a game of probabilities, and with a descending triangle, with a rising pressure on a horizontal support, a breakout to the downside is more probable, and as we said, trading is a game of probabilities, so we should always do what is more probable, and this is more probable. That will break the lower line of this formation. If we will get the daily chart, I can also connect those supports, 1, 2, 3, and you can see that this line is being protected as well. So definitely Bitcoin negative sentiment. You may say that we are on the support, so when we are on the support we should see the bounce. Well, yes, but it's not a support in an uptrend. That's the first difference. When you're bouncing from, when you're touching support in an uptrend, yes, most probably you will get an upswing. But if you're touching support in a downtrend and every single upswing is smaller, this one smaller, it shows you that there is a rising selling pressure here. That selling pressure is rising, and that most probably, eventually, not now, but eventually you should get a breakout to the downside. Okay, now American dollar to Canadian dollar, and this is also beautiful. I love it because I told you about those two shooting stars, that normally those two shooting stars should bring us a drop. But in the same time I said that I'm not convinced because they are not happening on a resistance. I draw this and I said, yes, there is a resistance, but I'm not convinced about that, and it does not look so good. Especially that the price came back above the neckline, and look, boom. They came back above the neckline. That was a false breakout, and this is the power of the false breakout again. So there is definitely no sell signal from those two shooting stars. The price should aim the black line. That is the first target, and eventually this black line should be broken. Why? Because the main trend now is this one: uptrend, correction, uptrend, correction, uptrend, correction. So we should see the breakout of the upper line and a further continuation. Now gold. Gold is in a long-term symmetric triangle. We had a chance for a breakout of the lower line that would sort out the situation, and I said that I'm negative, but in the same time I said don't open a position inside of the triangle because it makes no sense. Open a position when the price will break the support here, but the price did not break the support, so no position here. Now we are going to another line important, which is a horizontal resistance, an upper line of this triangle. So the breakout of the, not the upper line of the triangle, but breakout of the horizontal resistance will bring us a buy signal. But this one stays here, obviously. Cable is respecting this upper line of this channel up formation. Actually, if we want to be precise, we need to move it like this and like this. Okay, For the short-term traders, I don't go below M15 H1, but for the short-term traders, you would have a lot beautiful double top for now, but maybe a head and shoulder formation. Let me show you. Yes, left shoulder head, horizontal support, which is a neckline. Breakout of the blue line should give us a sell signal towards the red line. WTI oil, horizontal support got broken. Well, so we have to go down. It is also said, and many experts are claiming that also drops on stocks are driven by the higher price of oil. That it's bad for the companies. Okay, fair enough. A few years ago, when the oil was going up, stocks were going up as well. So you have, from the fundamental point of view, you have so many explains that you can get lost with that. So what oil is doing? Oil is testing the midterm uptrend line. Breakout of this line will not do any harm, but breakout of the green line will do. Breakout of the green line should lead us to the long-term uptrend line. But as long as we stay above the long-term black line, the sentiment is positive still. Australian dollar to American dollar, this level lost a bit of relevance, and we can move it here as a horizontal support. And there is this line. Sentiment definitely still negative, even with this drop. This drop does not change anything here. Lower lows, lower highs. Canadian dollar to Japanese yen. I was thinking about the possibility of a correction equality pattern here in a horizontal support, but no. This correction equality got ignored. Well, fair enough. We won't argue with that. We need to listen what the price is telling us. I won't argue with the price. We are bouncing from the long-term downtrend line. Most probably will test the long-term uptrend line. So we are still in the symmetric triangle, and this scenario is actually still in place. I thought that after this right shoulder and this upswing, we shouldn't get a head and shoulder pattern. But once the price will get there, that will be a head and shoulder pattern. So definitely this instrument stays with us. Dollar index, that's a drop. That's a breakout of the lower line of the rectangle. Rectangle should result it with an upswing, but resulted with a downswing. Now we are aiming this line. Let's check the Fibos. 23.6 respected, 38.2 respected, maybe 50 will be respected as well. Australian dollar to Swiss franc. Quite surprisingly, I thought that we'll get a downswing here. Why? Because that's what the trend is. We also had a head and shoulder pattern. We had a flag here. We broke the lower line of the flag, drop. Right shoulder, drop. Symmetric triangle, drop. Price being below those lines. Price being below those lines was an ultimate sell signal for me, but as you can see, my idea of the technical analysis got crushed here. There is another resistance, support, 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 resistance. Anyway, to be precise, I'm not looking for a place for a bounce because the sell signal is gone. Sell signal was here, and most probably that is a false breakout. And you know what I said about the false breakouts, and I keep that because it's true. So false breakouts usually result in the strong movements in the opposite direction, so I wouldn't be surprised if the price went significantly higher here. Silver, still a rectangle, breakout to the upside, buy, breakout to the downside, sell. American dollar to Japanese yen, they showed the bearish strength because they broke from the lower line of the wedge formation. That is still a sell signal. Just let's do it like this. I think that the movement towards this uptrend line is quite probable. So with the current price, that would mean like 50 pips drop. Euro to British pound. Look at this. Yesterday we said that we should get an upswing and a further drop. At least the first part of this scenario is happening because we do have an upswing. After such a strong drop, we should see a correction. That's what is happening here. I don't know how deep this correction can be. That's when Fibos are handy. Maybe 23.6, maybe 30.2, maybe 50. We will see. But now, for now, the bullish, short-term bullish scenario is in place. It's in the game. New Zealand dollar to Swiss franc. Bounce from the horizontal support. As for now, head and shoulder formation is here, but we don't have a signal. Breakout of the orange line will give us a sell signal. I'm sorry, Australian dollar to New Zealand dollar. There was a false breakout here, so another false breakout signal. That's a sell. Swiss franc, Japanese yen. 3 bearish weeks in a row, quite strong. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bearish trading days in a row. That is huge. But now we're on a horizontal support, which may be an occasion for a correction. Euro to Swiss franc, as long as we stay below the blue neckline, the sentiment is still negative. And British pound to Japanese yen, still locked in a sideways trend, waiting for the breakout. And here we have indexes. So let me recap the situation for you. Euro dollar buy, S&P 500 sell, Bitcoin sell, American dollar, Canadian dollar buy, gold inside of the triangle, no signal, cable, no signal, oil, no signal, Australian dollar, that is still sell, Canadian dollar, Japanese yen, that looks like a sell, dollar index, that looks like a sell, Australian dollar to Swiss franc, that looks like a buy, silver, no signal, American dollar, Japanese yen, that is rather sell, Euro to British pound, long-term sell, short-term buy, New Zealand dollar, Swiss franc, no signal, Australian dollar to New Zealand dollar, that is sell, Swiss franc, Japanese yen, chance for a short-term buy, Euro, Swiss franc, still sell, but not very strong, and here British pound, Japanese yen, no signal, and DAX, strong sell, Nikkei, strong sell, Nasdaq, strong sell. In the long term, obviously, because we at some point, maybe tomorrow, today, on Monday, we should get some kind of a correction. So guys, thank you very much for attending the daily analytical report. I hope you enjoyed that, and now you know what is going on the markets. Thanks very much, and see you in half an hour on the webinar about trading psychology. All the best.